Good morning, everyone. Welcome to the Euro Trade on TopstepTV. My name is Deeyana Angelo, better known as Market Stalker D. I've been trading for 18 years. 13 years out of that, I've been a prop trader specializing in mainly energies markets, but also precious metals, so more of a commodities trader. Okay, well, let's take it slow. I'm back from my travels. I went to see my mom for a few days last week. And yeah, let's have a look at the bird's eye view of what all of these markets are doing today. I have the monthly charts lined up here. I will be trading a little bit later today on my live while I wait for DAX to arrive. Because frankly, for me, for my style of trading, the setups that I've been seeing are more kind of swing type setups that are setting up later in the day. So I'm going to be patient. And yeah, first up, copper. Copper is in a very precarious situation here. Since March 2022, it has this pattern, if you look at the monthly chart, where it establishes, it's actually been doing that since May 2021 as well, because that's the first time that it made an all-time high, then created a selling wick, and then went into a whole month of sell. And then it does the same thing almost a year after that, where it makes an all-time high, creates a selling wick, and then the entire following month is also a sell. This pattern continues. So this is why I'm saying this is a very precarious, super precarious area. And therefore I want to see whether they're going to do the same thing. So I want to stay patient, watch this former range for any sort of short setups, but clearly we're going to be using the intraday setups for that. Now, every time you're looking at a swing type setup, they will rarely happen during London. Rarely. Like, copper has moments where for the first part of the year it can actually kick off a trend during London, but somehow during the second part of the year that's not the case. So most of the stuff that's interesting will usually happen during COMEX, just probabilistically. So again, no need to rush here. But yeah, that's something to keep in mind, this bird's eye view. We have a weekly new all-time high. Are we going to end up this month with a sell wick and a reversal for the entire August? We'll see, right? Nobody knows really. But it's certainly a pattern to make note of and commit to memory, and then come back to that massive time frame every so often. Now moving on to natural gas. Natural gas looks like it wants to reverse at a demand area from this monthly chart. We established a new monthly area, touched the edge of it, and moved away from it. So really, in order for this to be a proper reversal, and it is the summer, so we can have some increase in demand for natural gas because of the air conditioning and all of that. So that might be a good sort of intraday setup, intraday idea to look for longs on natural gas at these levels. If I fall down to the weekly chart, similar outlook, very similar outlook with I'm sorry, just give me 1 second. Sorry, my husband just decided to walk into the room and then crawl sideways, and then didn't say a word and decided to leave. So yeah, I just wanted to see what that's all about. Did not find out what that was all about, so let's continue. So yeah, natural gas does seem to look very similar on the weekly chart. It got to some of these thicker high volume nodes No good quality demand here, but they're attempting to create a bit of a breakout here when it comes to the, just looking at the composition of the candles. So yeah, whenever I see this, I'm very careful with whether this is a new range or whether it's a potential reversal. So again, a little bit undecided, but overall I would be probably looking for longs here if they set up intraday. On a 4-hour chart, it's definitely going towards this localized supply around 3524. And there's the supply. And we don't really have too much there. We have one high. Now they could do a, stop run and reverse as well. Volume profile not helpful here at all. Everything is just building volume in the same area, so that's not really telling me much. So again, natural gas, I prefer to trade for the NYMEX session later in the day because that is its main part and where most of the good, easier moves will be happening. All right, let's have a look at gold. Now for gold, because I know a lot of you trade it, I'm going to give you some options levels on gold as well. But this is looking like an accumulation to me. Obviously still in a range, but they keep trying it. They keep pushing and pushing, but trading in these sort of situations is very difficult because it's obviously the consolidation on a massive time frame. So you might think, oh my god, this is looking great, and then it just turns around on you and goes for like 500 ticks in the opposite direction. So be very careful with gold. It is in, again, a precarious situation. Doesn't look particularly bullish. It looks like it's trying to accumulate, but it's not there yet. So you might have to give it a little bit of time to decide what the hell they want to do with it. For now, on the weekly chart, we have a fairly well-established range and this I don't think has changed since last week. So we have a high up at 35.42, and we have a pretty well-established low that dipped into this localized demand here at 31, roughly 59. Now, if I look at where the gamma walls and any kind of put supports are and some of the major options levels from yesterday's end of day, I will say that 33.95 is a gamma wall to the upside. We do have a GEX1 at 33.75, so that could be like your line in the sand where we are at right now. If it breaks down and it sustains below it, that would be more bearish intraday. If it manages to hold above that level, then again, look for this market to trade up towards the gamma wall at 33.95. If it starts to fall, we do have some more meaningful levels around 33.50. And then further down, that 33.30 keeps coming up. And then we have a big 0DTE options level at 3300. So undecided on gold at the moment. And therefore, that's only going to be intraday because of the range that I'm seeing here. But yeah, those are your options levels in gold. Keep in mind the range on the weekly. If it gets to any of those levels, for now, I would just be looking at that range being respected, and also because it is the summertime, so it's a little bit less committal. Let's have a look at platinum. Platinum looks very bullish to me on the monthly chart. So we had a high from like many years ago on this particular contract. Now, obviously, with every new contract, these prices are adjusted, but as it looks right now, we're well above it. So I wouldn't necessarily fight against that as an overall strategy. Therefore, maybe looking for pullbacks to a decent level and then further longs would be better. If you get to a point where the intraday gets a little bit stretched out on the day, towards the end of the session, you could look towards 1500s where we currently have the gamma wall and some core resistance both from 0DTs and the overall options chain. Otherwise, yeah, it's pretty bullish. So like I said, unless it's later in the day, I wouldn't necessarily fight the uptrend that I'm seeing on super large time frames on platinum. And platinum has been breaking out during London. It does have those moments, not every day, but still. The projected options volatility for platinum is 14.33 to the downside, and then not too far away from that core resistance. So I have 1500 as a gamma wall, and then projected upside for the day at around 1506, let's say. But again, remember, everything's a zone, so it's not like, oh yeah, D said that's like to the tick. No, it's a zone. So once we arrive there, you kind of turn yourself into a code and go, what is the price action doing? Is it continuing, or is it stopping and breaking the microstructures to the opposite side? That's basically what you want to see. You don't really want to get involved unless you see that. So you don't really want to be guessing. We're not psychic, right? We're not sitting here with crystal balls and going, it will turn around at 1500. That's not that kind of an activity. Have a look at Nikkei. I don't have Nikkei on my live because I don't trade it often enough on this account. I mean, I could go into... if I could be bothered, I could go into one of my combines. But you know what? Let me drag out Nikkei on my other platform, because we can get a very quick overview of what's happening. Where did my Nikkei go? Oh. There it is. Okay. I have 5 screens now, so that's... Now this is the platform where I have a whole bunch of stuff calculating. All right, so Nikkei on the weekly chart, I don't really see much here. I mean, it's a bullish product in general. It is an equity index, so right now it's extending to the downside during London, but bear in mind Nikkei in London, like, you will only see it move properly for London if you have some big release beforehand, like let's say an FOMC rate decision that was either cut or they did a rate hike unexpectedly, and then Nikkei has to reprice. That's usually the times of the year when I will try to see if there is something there, especially after we have a huge sell-off in equities, and then Nikkei sort of follows that. And then you have this amazing setup right after Tokyo Open, when they kind of shake out. It's kind of like a stop run in reverse for every session. They do that for everything. Like anytime you have a new session kicking in, they will try and take out the high or the low of the previous session, especially if it's like really well defined. So that is what I look for on Nikkei. But you know, I only traded like maybe 3-4 times in the year. I wouldn't call myself a Nikkei trader or anything like that. I just kind of fish for those odd opportunities that set themselves up. Let's see what Tokyo did today. So let's go to the 30-minute chart quickly. Yeah, I mean, I wouldn't call this any sort of a good setup or anything. Very quiet. Very quiet, but it respected the range though. So respected the Tokyo range, and then nothing, and then it started to reverse right after. So what they do in the last hour or so, they do this take profit move that is a high probabilistically high setup probabilistically. Final hour of Tokyo sell-off, and again, that's something that you will see a lot across the board. I'm not awake at that time, so I usually wake up around 8 my time. So all of this, unless I want to stay up, which I don't because mental capital. Yeah, I only stay up to party with Nikkei if there's like a really, really extended move, and then I'm like, all right, let's see what's going on in Asia. Otherwise, I will sleep, man. So, yeah, I can't really see anything that great. The downside on the weekly is very non-committal. Very non-committal. So, you know, Nikkei does this thing where it might sell off, but then they just kind of jump and keep going higher. Unless Bank of Japan is doing something. But, again, I'm not a Nikkei trader. You know, it's not something I look at all the time. Let's have a look at crude oil. So I'm going to recycle this chart here. Now, crude oil, when you look at it from the monthly chart, it's still very bloody range bound. Look at that. With a slight downward skew. Why do I say that? Because we've had this supply that that's been in force since November 2023. And it keeps being reactive. Every time they get it up there, somebody goes, we're going to go lower than here. This is way too high. So, you know, that 80, roughly, that $80 area seems to be quite precarious. And they've not allowed it to go back up above it. That's probably somebody trying to keep prices of crude oil relatively stable. Is this the reason why crude oil has been so meh intraday? Probably. They have introduced all sorts of stuff to introduce more speculators into the market, which stabilizes the price. The more speculators that you have, the more stable the price will be. And commercial hedges have no real measurable effect anymore. It used to be that they were the ones pulling the strings and you would get really nice moves. But now you get one day of about 250 ticks, and then all the other days are like 100, 130, 100, 105. And to give you an overview of how it used to be in crude oil, we used to have 350 ticks nearly every single day, and then it would go absolutely insane, and it would go for like 600-700 ticks on the more volatile days. So that's not happening anymore. But RBOB might be kind of like a twin of crude oil because they are connected products. Crude oil is obviously the raw material, and then you have heating oil and you have gasoline futures, which are derivatives. There is something called the crack spread, where all of those three products are done as a spread over longer periods of time to account for some of the minor differences between them. And then you have like ratios. You have 3-2-1, or you have 5-3-2, or something like that. I never did crack spreads, but I know a little bit about them. And yeah, gasoline futures might be a little bit better. Let's have a look at the weekly chart though. I mean, again, here we go with a downside bias. Smashes into supply and just melts. Just melts like all of this hasn't happened. And now they're doing the same thing. Crawling. So I'm guessing if we hit, you know, anywhere close to 72, we're going to see another melt off because this supply has been just very, very tricky. So yeah, I would be a seller in crude oil if I find a decent setup, but I haven't been doing crude oil religiously like every day. I've been doing copper every day. I have been doing DAX a few times a week, and natural gas maybe a couple times a week as well. But RBOB, let's have a look at what's going on there. And same thing. Whoa, I have a little stuff there. Let's clean this up first. It's like, ugh. When you don't trade something for a while, and then you have all of these drawings that you've done over time. This is probably from an old contract as well. I always like to clean up the chart and start fresh. Monthly chart. Okay, so this is very messy, but it does look like it's more of a commitment to the downside rather than crude oil, which is like complete rectangle. Still very range bound though. Still range bound. It is the summer, so not expecting like huge craziness unless Trump wakes up and says tariffs, and then we're all just gonna go take bump. Oh, and then you can just pray that you're on the right side of that. And if you're not, just thank the Lord for the stop losses and don't let it derail you. It's not worth it. But on the daily chart, and on the weekly chart, it's kind of a copycat of what crude oil is doing. That's why I call them twins, because they're very, very similar. And even intraday, they will be super, super similar to like a 70% correlation between them. And usually one of them might be stronger on the day. But whatever you do, just remember that RBOB is always the more liquid one. It's like the NQ of the energies markets. It's like it gets crazy. It likes to whip around a bit. And even now, just looking at the overall range of the previous candles, we're already sitting at like 55 ticks. Now, once the regular trading hours kick in, everything will liven up. However, on RBOB, if it goes into a nice trend, there is usually during London, there's usually an opportunity to do a little fade of that move into NYMEX. So that kind of overlap when the Americans stop waking up. And then we have that odd increase in volatility from my 11 a.m. all the way up to like 2 p.m. when NYMEX opens around my time of the day. There is usually a fade set up there. So sometimes I will do that. It's Monday, so I won't be doing that today because, I usually like to structure my week with almost like a bell curve of trading activity. So on Mondays, I try to trade less, and then depending on how that goes, I will maybe increase size into Tuesday and Wednesday and Thursday. And then again, depending on how that goes, I will try and wind things down for Friday. So yeah, but very similar product, very interesting. And gun to the head, what would I trade today? I would usually trade RBOB over crude oil, definitely. All right, let's have a look at what's going on intraday, maybe on copper. So be careful with this bird's eye view, right? So we are looking to see whether there's some sellers there. One of the things that I've noticed is that on the large sort of overview of what the profiles have done over the last few days, we have a lot of overlapping values, especially during COMEX, which is its main session. So just to show you my little overview here. So here's the first value, here's the second value, this is COMEX, here's third one, and here's Friday. So overlap, 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 overlap. That is called a bracketing market. It's kind of similar to consolidations, but because consolidations are considered very uniform, so you can see it just purely with price action. But this one is more of a distribution where the price action moves, but ultimately the distribution curves of whatever they've done during the regular trading session have not really been moved much. So therefore, this causes an overlap of the distribution curves. And that can lead to liquidation moves. Now, that would speak to that larger time frame picture. But in order for that to happen, I will really need to, like for the really good setup, I needed to open below Friday's value low. That means that we need to open below like 553.70 and not too far out. So I don't want London to kind of escape and just go whoosh, like let's just do a big flush there. I would like it to be pretty orderly, so not too far away from that. And then to see a meltdown during COMEX through 550. So 550 on an intraday level is a pretty big level. It is a former call resistance from yesterday. We went over that, so if that melts down, that will actually bring us a pretty decent sell-off, especially if it's accompanied with like an initial balance extension, clean extension to the downside, just to one side, and then they stick below the initial balance. So that's kind of what's in my head. If that transpires on the chart, that will be an ideal situation. If that doesn't happen, there's some alternatives, like you can maybe go up to the value low if you've opened below it, then fail the auction from that level. That would be a pretty decent setup, but it would minimize the target, because in that case it's not a swing, you're only looking for a rotation through IB, maybe, you know, slight extension into the neutral day, so extensions of both sides of that first hour of trading range, and other than that, it's it then becomes more of an intraday setup. Shivam wants to know, how do you trade DAX on Topstep? You don't. I'm still waiting. I've been waiting for a year. I'm hoping that they get like the different exchanges. Right now they only have like US based exchanges, but you know, they're becoming a brokerage. So at some point they have to allow people to buy other exchanges, right? So I do trade DAX during London, and when we were talking about running these sessions, the idea was that we're going to bring DAX and that D is going to trade DAX during these hours. That did not happen, and hopefully it will happen at some point. You know, I'm a trader, I can wait, I'm patient, I ain't going anywhere. So, you know, in the meantime, I do trade DAX on my own account, and you know, I have a couple of accounts that I use for my personal stuff, one corporate account which is not under my name, and then one my sort of YOLO account, and yeah, so yeah, we're still waiting, and you know, hopefully it will be before I'm like an old woman. Otherwise, it would be like, D is turning 70. It's like, the Topstep brought DAX. Finally, we can trade DAX. I can't see, but we can trade DAX. Just a joke. Just a joke. Now that they have one platform, I'm expecting everything to go much quicker. You know, but we're allowed to kind of poke fun at ourselves. Of course, I'm very lighthearted about that. But yeah, we'll get DAX at some point. You know, it's only been a year. What's a year compared to eternity, right? And yeah, I'm looking forward to the day when I can get you some nice DAX setups. And you know, in light of that, let's have a look at DAX a little bit. So DAX from the larger time frames, still looking a little bullish. I mean, to me, this is looking like a rally-based rally on the weekly. Obviously, the final rally has not happened yet, but usually, like look, it's sitting at all-time highs. This is a little different than the US equities, because DAX never really came off that much from the highs. It was sort of following it, but it was all along, it just looked more bullish, because whilst everybody else was kind of melting through longer-term demands, DAX never did that. It just, you know, kind of stayed fairly range bound. And yes, it was a massive move down, but obviously, just like the rest of them, very quickly went into a new all-time high, which didn't happen in equities on the American side for a while. I think they've only now got to their respective all-time highs, whereas DAX was like, we don't care, we're German, we go back to all-time highs. Terrible German accent, I'm so sorry. Apologizing for all Germans that are watching this. I love Germany, so I've been there many, many times, and some of my favorite cities are Heidelberg and Frankfurt. Beautiful, beautiful place. Anyways, let's have a look at this composition here. I think this is like a reaccumulation that is going to bring us on that massive time frame higher, even higher. Show me the higher love. A bit of Whitney here for you this morning. So yeah, I would be looking for longs, whether that's in the form of a failed auction long or maybe a breakout into a mean reversion. That depends on the day. Today, we do have a mean reversion long opportunity to go and test the value low at 24,276, which is also where incidentally the average session range from the London DAX levels is coming from, literally like in and around that same zone. We have settlement from Friday, slightly higher up. As yet, no break of the initial balance, so there's nothing for me there. But I do have some levels down below 24,100 that I might be looking at. So maybe if it retests this whole area, smashes into a failed auction, and then decides to rotate back up. If that doesn't happen, the second hypo would be a breakout because the VWAP is being supportive here, I can see. Maybe look at this as a range and try to go in from slightly higher. So 24,122 would be the bottom range. So put on your Dolby hat, snipe it here, and just hope for the best that it goes into an extension. I don't like trading things before the initial balance is actually smashed, because that means the other time frame guys are not around yet. They're just like asleep or drinking their Red Bulls or whatever the hell they're doing. But yeah, I think that anytime we trade inside the initial balance, it's always like pulling teeth. It's like, oh God, here we go again. And that's because the market makers are still very, very active in that range. Once it breaks out, whether it fails the auction or continues it, that becomes a little bit more fluid and much easier to deal with. Let's look at some questions. Mango High says, hi Deeyana, really enjoying the supply and demand videos, but how did the what? Hold on, let me decipher this. What is the entry technique you recommend to novices? I would recommend first and foremost that you create a plan, not in the way that, oh, that plan now has to be 100% correct. No, a plan is just, especially for novices, a plan is there for you to track your progress or lack thereof. So contrary to popular belief, until you get to some like advanced expert levels, you're not going to be great at plans. And that's perfectly normal to be expected, right? So what I would say is have a level, right? Have 4 levels at different points of the chart. So let's say, let's do copper. I don't know what you trade. Maybe I can have a look at whatever you're trading and then maybe, yeah. Shivam says DAX daily is very bearish. Be careful with that statement. Equities have been going up for 40 years. DAX has been going up for all of the years that I've been trading it, which is coming up to about 8 years now. Because DAX is something I got involved with later in my career. And yeah, every time I thought, oh yeah, DAX short, it would just smack me on the face. Unless there's something else going on, like, for example, tariffs, right? Or, you know, COVID, something like semi-apocalyptic that's like really going to put a wrench in the works. Otherwise, equities are designed to go up because of what they are. Nobody is actively selling equities unless it's a semi-apocalypse time, right? And in that case, you should probably be more concerned about getting a machete and some leather shoulder pauldrons, Mad Max style, rather than worrying whether you should be buying or selling equities. You know, you will have different problems at that point. You know, nuclear winter, like, and all of that. But yeah, when it comes to equities, just be careful calling shorts out. Unless they're, again, I don't know you, so I don't know your style. But if you're looking for some big swing low, just know that equities have a nasty way of like selling off and then just instantly turning around, because there's always bottom pickers in equities, and then just going into a short squeeze and running all the shorts over like it's a steam train that takes no prisoners. So, you know, from experience, I'm not a huge fan of shorts and equities in general. That's not to say I never do them, but if I look at the daily chart, I will always look for an evidence of continuation. Supplies don't work on the daily chart on equities, okay? They will always get broken. Why? Because equities have an upward bias. And whenever you're thinking, oh, this is a great supply, unless you're going to be in it for like 5 minutes, which could be like, it could be a strategy, you know, that if you are going to be short equities, that you don't stay exposed to shorts for too long in equities. And then when the longs set up, you can be more aggressive with holding it. That's another thing that I do. You know, if something is in a fierce uptrend, smashing all-time highs all the time, and you're holding shorts forever, like you're trying to hold it for 30 minutes, 1 hour, 2 hours, 3 hours, and it's not moving, or it keeps coming back to your entry, it moves away, it comes back to your entry, moves away, it comes back, what does that tell you? It tells you that not enough sellers are pushing it with some meaningful momentum. So please, please, please be careful with shorts and equities. Like I said, it's not that they don't happen, but I'm just, after all of the years that I've been seeing what equities are doing, I'm very skeptical. Just like I'm skeptical about crude oil longs, right? Because I've seen crude oil, the only time it went all the way up to like 114 was in 2014, when that was like my very first year from 2013 getting really involved in crude oil. Because of what? We had a problem with crude oil supply, right? So that was a fundamentally driven move. And even then, when they got to some like higher levels, they just started selling it off like it's going out of fashion. And then not to mention COVID. Like COVID was like, crude oil went negative. And that's why I'm like, longs in crude oil. Do we actually have a reason for this to be happening? And if the answer is largely no, if it's just like a speculative, in the moment focus of, you know, oh, OPEC Plus did this or whatever, it's always going to smash back down in my experience. So that's why I'm saying I hate being long crude, because there's always sellers around. And every time I'm long crude, I'm always feeling like somebody's going to pull the rug from underneath my feet, which has happened many times. And it keeps happening, right? Every time I'm long and I'm like, this is a good swing long, we get to a certain part of the day and it just turns around, takes most of the profit that I've had on the longs, and then I'm like, okay, not a breakout then again. And then I would be, you know, thinking, well, I should have been maybe less aggressive there. But, you know, you listen to other people, you're listening to news, and they're like, and then you get almost like convinced that, oh, maybe crude oil longs are the thing. But, you know, I'm following my own plan on crude oil in general. So I like to fade crude oil longs. So that's all I'm going to say about that. But yeah, equities, long upward bias, crude oil, short bias over many, many years. So yeah. What is the entry technique that I would recommend to novices? Plan, first and foremost. Have a few levels, and good levels that matter, right? Something like exhaustion of the day's range. So you can find that roughly by looking at ATR, for example. How many ticks does this particular product move in a day? And then mark those on your level. Like obviously I have my own indicators that do that for me automatically, but you can do it manually as well. And it might actually be a good thing to have the ATR, which is, probably can't see it here, but it's always good to have this bottom part is my ATR. What does that say? It says on copper 21 points, which is about 42 ticks on this particular time frame. However, to find the daily range, like the daily averages, go to the daily chart and then look at what the range is saying. And it's actually saying 176 points. Now we have to double that for ticks. So 352 ticks is what we're working with, intraday range either side. So when we see where this thing opened, you can then project how far down this is going to do. But there is an active calculation there. So you have to add the current day's high and then subtract that from the overall level, and same thing on the low side. So once the new high or the new low of the day exhausts the 176 points, that becomes your exhaustion area. And that's a very good area to look for reversals intraday. You have to be very patient because you have to wait until it's exhausted. And then the next thing for me would be to look at something like the settlement price. So where did copper settle? I don't know whether JD does settlement for copper, but today I can tell you that the settlement, and what settlement is basically the official close time, which used to be the former open outcry pit close time, and they still settle at the former open outcry pits times, even though you can still trade it. Many of these products keep trading until the end of the day when the New York Stock Exchange closes. the volume will massively drop off. So it's almost like all of the open outcry guys have moved into electronic trading and they're still doing the same thing. So they're finishing their day after settlement. Settlement from Friday was 558.40. That tends to be a pretty good area to either trade to or trade from it as well. Why? Because a lot of people will be looking at it as some sort of a middle stopping point. It's the price where they mark to market, and that's how they calculate the overnight risk and margins and a whole bunch of other things. So that's why it's an important price. Then the third price would be VWAP, or Globex VWAP. Where is that located? Are we underneath it? Are we above it? And then if we're underneath it, the simplest way to look for entries is to wait for the test of the Globex VWAP, and then to look for a 15-minute bearish engulfing or some sort of a pattern, 15 minutes. Nothing lower, not 1 minute, 5 minutes. If you're a novice, stick away from low time frames. Low time frames come later, right? Low time frames are dangerous for anyone who hasn't been staring at the markets for like many years. Why? Because then you've got kind of like blinders on. You're like blinkers, like a horse, and all you can see is just a tiny time frame, and you don't know the larger time frame. But VWAP, Globex VWAP, can provide you with the extra dimension, extra context to diagnose a chart properly. And usually you want to see the VWAP sloping, and you want to see the price actually retesting VWAP and then providing you with a further swing lower in the same direction. If that doesn't happen and VWAP is flat on the day and prices are just running through it, or maybe pausing a little bit but generally just running through it like it's not there, that's range bound. That's a range bound market. So have a few levels as a novice. Don't have levels longs and shorts around the same area. That's a recipe for disaster. Best way to cut yourself up, because you stare at a 1 minute chart or 30-second chart, it gets to VWAP and then it kind of overshoots it a little bit and you're like, it's a long, it's breaking out, and then it comes back down, and yet you look on the 15 or 30-minute chart and you see a very beautiful, very clean sort of reversal that you could have used. So that is what I say to novices. Clean it up, have very well defined levels, same levels, so that you can track progress of how your setups are working around it. And it's a job, it's a very big venture to find out how you can use some of these levels in your own way. Now, some people want to do a shortcut and therefore they do a course, but you have to find a good course. I've got some, but mine are probably a bit over the head for the novice traders. My courses, I don't say, oh yeah, you've been trading for 3 months, have my course. Don't, please. Wait maybe for like a year, and then maybe you'll be ready. But if you're already, a year into it, actively trading, trying to master this beast that is intraday trading, maybe have a look at my program. But otherwise, I would not force anyone with a stick to buy anything from me, because it's got a few moving parts, and you need to already know how to read price action. You already probably ideally need to have a decent idea of your trading ability and what your problems are, whether it's strategy, whether it's psychology, whether it's both. And for novices, it's going to be both. So until you sort at least one part of that out, it's just a waste of time for both of us, right? To kind of try and do auction theory and market profile and quantitative extremes. Like it just gets a lot. So yeah. But, I do have shorter courses as well. They're super cheap. So maybe start there, see if you connect with them. If you don't, just try and develop more experiential learning and more, chart time. And then maybe at some point, auction theory, order flow in real time, that might become something to have a look at. But don't confuse yourself immediately with order flow. That's like, you need to slow it down. You need to slow everything down when you're a beginner. Get some proof of concept with that slow style of trading, aiming to do like 2 to 3 trades a day across maybe the same time frame. So, don't mix and match sessions. Choose one session and see if the same sorts of setups are appearing at the same time of day or roughly in like a 90-minute period. So if you trade London Open for the first hour and a half, that would be one set of setups. If you like to trade the overlap like I do, Now it'll be different sorts of setups. So, every time of day carries probabilistically particular setups, so try to stay as consistent as possible. So don't trade Asia one day, then London another day, then you decide to trade like Power Hour another day. You can do that once you have experience in all three, right? But for the beginning, you need to develop your skills. And just like a musician honing their skills on one instrument, you need to get to know that instrument, how it lives and breathes, how it behaves through various market states. So not just like one market state, but how does it behave through the summertime? How does it behave through Christmas? How does it behave through tariffs? How does it behave through, normal times when we have regular volatility that is pretty good, but it will be a mix of like, sustained auctions, range-bound days, fake-outs, breakouts, all of that. Once you're there, things are going to start looking more like a mess, and the cobwebs are going to start clear ever so slowly. But it's a long process. We have some people on YouTube that we've been following sort of like, for years, and some of them are only now starting to show consistency, but they've been at it for like years and years, and that's that's very commendable. That's like, it shows determination of the people involved, and that they're just not giving up. Sort of like, fake it till you make it moment. But yeah, it's always nice to see breakthroughs like that. And yeah, 8 years, 9 years, sometimes that's what it takes, guys. Like, you have to keep trying, keep tweaking, keep learning about yourself as well. Once the strategy is out of the way, which is arguably the quickest part of learning how to trade, then you have to know yourself, right? What irks you? Why did you lose control in that one day? That's what becomes the toughest part. And then you have to do a whole bunch of introspective stuff and work on yourself to stop yourself from doing stupid stuff. And then someday you look back and you're like, holy crap, okay, so I haven't had any disastrous moments. It's not like you wake up one day and you're profitable and yet yesterday you were unprofitable. It doesn't happen that way. And even once you're profitable, it's not like, yes, I've arrived, now that's it. Trading is unlike any other business, right? So even when you think you've got it all down, COVID comes and some people fall apart, or tariffs come and people fall apart. It's like, so now what? But if you have a tried and tested process to see, what was the average range for this particular period, and it's like, well, what is happening with the average range now? Oh my God, holy crap, it's gone like 5 times over that. Well, then you can be, applying some critical thinking. So you can go, well, I can't use a 30 tick stop because we only had like 200 ticks to play with. Now I have like 1,000 ticks to play with. So the logic would suggest that you have to increase your stop size, lower your position size. So same risk per trade, if possible, but, maybe look at the structures, whether is the structure still the same? This is what I found with high volatility. Structure is still the same, but it's either massively amplified and goes for like 1 million ticks, or if we're in a summer trading time zone, the setups are like tiny, right? So it's like all range bound, lots of fake outs. Let me just clear my throat because it's the morning and I started talking. All right, that should be a little bit better. Some water. But yeah, so that would be the process, right? Have good levels, track your progress, and just stick with it, man. Like, journal. What have you done right? What have you done wrong? Did you follow your rules? Did you, chop yourself up going long, short, around the same level? Or did you get done? Like, did you take it on the chin? And then you waited for the next level, further away from the initial level that you were getting involved. That's what you should be doing, right? And if you're going to take away anything from this stream, let that be it. For the beginning, or if you're trying to sort your strategy out, don't do the whole line in the sand, or I'm either going to be long or short at VWAP. No. Decide where you're going to be a buyer and where you're going to be a seller. And then like that becomes a non-negotiable. Shivam also wants to know, could you tell me how to read these yellow-blue blocks, please? Again, that's volume profile. I would probably only stick with volume profile on large time frames. If I'm a beginner, if I was a beginner, I would not be looking at, something like 30-minute chart. Because again, lots of fake outs. And a lot of the times you will not even have anything good to look at. But basically, volume profile takes in volume rather than time into consideration. It's almost like the same thing that you see here, but as a vertical histogram. And that kind of lines up with the prices, and therefore visually it's easier for us as humans to look at where the volume was located. Look at it as supply and demand, support, resistance. So whenever you have a lot of volume, like it's thicker, just like wider and thicker, that means there was some accumulation, some demand happening there before the move up. The rest of reading volume profile is down to your own skills, because now let's say we are in a very thin area and they might build new supplies here. They might, stay in this area and accumulate more volume, which would then probably mean we're maybe building a supply. So then a move from the high volume node through the low volume nodes to the other high volume node, that's what you're looking for. So prices, when they're in a lower volume areas, they have to search for these higher volume areas where the orders might be still located. And the thin volumes will always give you quicker price action, but they can also be longs or shorts. You don't know which side they're going to be getting involved. So for example, if you have a very thin volume up, if I use copper as an example, up at 579 and above, you don't know whether that's going to cause a reversal or just a smash through it. There's a kind of liquidity vacuum when there's like nobody else to take your order, and they just kind of keep pushing it higher until they find somebody who will take your order. So you don't know which side they're going to do. If you're in a wedged area where you have one high volume node here, one high volume node here, and then you see prices drifting towards the LVN, the low volume area, and eventually sustaining into that area, then you can say, okay, well, probabilistically this should now fall through that area. But again, it's a more complex way of looking at the market. It's more kind of a fancy way. It definitely helps for somebody who is looking for volume-based supply and demand. It definitely does help with that. But how do you read it intraday? Explaining that to a novice is very difficult, because it's one of those skills that's very situational. It's a situational awareness thing, and it is completely down to the skill of the trader. Okay, so just keep that in mind. This is the toughest job in the world, guys. You're up against yourself, and you're up against all of the people. Like, there's no stepping stones. You step into the market kind of like stepping on the Formula One track, where everybody's a lot more skilled, and you turn up with a bike expecting to win the race, right? You're like, okay, let's go. Me with my BMX, What do you think the outcome of that is going to be? It's going to be that everybody else is going to have all of these like very sophisticated tools and weapons of destruction for the retail trader. And, you just have to roll with the punches until you get better. That's just the name of the game, right? Kind of like in sports. You also, you want to get better. Well, yeah, you might be playing with beginners, but ultimately, if you want to step up your game, you have to step in with the pros. And then you just see how sucky you are. And you're like, wow, okay, I need to up my game here. And then you have two choices: give up or get better. There's nothing in between. And it takes as long as it takes. You can't give up. This is not for the faint-hearted. If you are expecting that you're going to get rich in 3 months, forget about that. This is not a get rich quick scheme. It's a long-term game. There's lots of ups and downs even once you get rich from trading. It's never like, I've arrived. You know, it's always like, oh, ouch, this again. It's always like peaks and troughs. You're doing well, then you're not doing well. But the difference, I think, between those of us who have managed to survive in this game versus those who didn't is how we carry ourselves during a drawdown, right? It's never like, oh yeah, well, this is it now, I'm done. It's always like, let's see what can I do better. And sometimes that involves changing a product that you're trading as well. You know, I've been through that like 3 times now, where, you know, my initial specialized products died, like liquidity was just dry. And I had to move to something else, you know, because to me, I still want to have a certain amount of ticks available in the day in order to be comfortable psychologically. And, you know, could I try and change it? Yes. But I just think that my system remains stable because of that over very long periods of time. We're not talking 1 month. We're talking 18 years worth of data, right? So whatever happens, I still always aim to have that medium accuracy with slightly higher risk reward. And that, I believe, has saved my ass so many times. John Killier says, how many years did it take you to become a pro trader? It took me about 6 years, but, you know, I started in 2007. I was taught by a friend who was already a trader. So immediately he taught me about stop losses, controlling position size in light of the size of stop loss necessary. It was swing trading, very different. And in arguably a little bit easier than what we do here today. But then 5 years, like I did have a lot of success initially. So 9 months into it, I effed up my first account. Then I sort of started again, regrouped, and then I made 6 figures. Well, actually, if you look at it, because it was in pounds, so I'm just trying to convert it to dollars. At the time, the money that I made was like just over like $500,000. So I was like, well, I'm a pretty good trader. I wasn't. I was just like new, you know, I was doing well. Swing trading was easier. And then we had the European austerity measures. So I'm sitting there thinking, I love trading. I'm going to go into professional trading. So how can I get in there? So prop firms came up. And I decided, okay, well, let's try this again. But it's all intraday. Is there anybody who does swing? And at the time, no, nobody was doing swing. Even now, like very few of them do swings because the intraday margins are much lower than the overnight margins. So that would carry a lot of risk for the firm. I understand why now, but you know, back then I was like, okay, well, everybody does intraday. Let's learn intraday. That took me another 2 years. So I was profitable, but was it like super consistent and drama free? Hell no. It was like 8-9 years of, you know, really heavily working on my skills and just, you know, going weekends. What is that? I would spend 17 hours back testing and learning about price action and learning about how it moves and breathes. And, you know, it was a long road, very long road. I wish that somebody, you know, I wish that TopstepTV or all of these TVs that we have now are, you know, were something that we could watch and kind of learn things from. But I didn't have anything like that. So it was all like, you know, plan, process, try it. Does it work? Does it not work? Chuck out what doesn't work over a 3-month period. Keep what works. Just keep going. So that's the pinnacle of everybody's trading skill. A mishmash of things you've come across along the way. Kept the ones that worked for you and discarded the things that didn't. That's all it is. So yeah. Well, do you guys only look at gold? Well, I've got copper on my screen, so I don't know what, you know. So yeah, John, just to finish it up. So how many years did it take? I'm going to tweak your question slightly. How long did it take you to become consistently profitable, meaning trading without too much drama and F-ups over a period of time? That took 9 years. But was I profitable from the start? Yes, because of the friend that taught me how to do it the right way from the beginning. But consistent profitability and profitability, in my eyes, are two separate things. So yeah. Yes, thank you, Sandy, for reminding me it's water time. Yeah. Atelier Craig says, good morning, D. Please go over your indicators and studies on TSX as possible. Yes, but bear in mind that I use TSX as an execution platform. I'm somebody who has mechanical trading systems, and we've done software development for what I do since about 2015. And then we've developed that more. So I use it sort of as a shell for some of the more price actiony stuff, like the dome, volume profile, my little timing tools, which is the ribbon. But I can tell you what I've got on here. So I've got 3 EMAs that I usually use on a super low time frame to see whether we're crossing over it or not, in case I want to front run any trades. I wouldn't recommend front running trades because that has hurt me in the past as well. But sometimes, you know, you get up to a certain level, and you've seen it happen a million times for, like, you know, post 9 a.m. Central into the Euro close. Yeah, I'm going to front run those, right? Because they've worked for me many times. London to me is more like DAX specific. And this is why, you know, I'm kind of half the time I'm like bumbling around, because London is a bit of an oddity. You can have this Frankie fake out thing where Frankfurt Exchange opens, then it smashes through Asia high or low and reverses. Other than that, usually London is more like momentum style trade. If it breaks out of the initial balance and sustains outside of it, you might get a little bit of a pump in the same direction, and then they wait until the next thing. So it's a bit of an odd market to trade for these products that we currently have. In fact, I would argue that Asia is probably smoother because they actively trade gold. But if you've noticed, like gold and stuff, it sort of gets stuck, and it does have a lot of days when it's just in the first 2 hours of London, it's so slow. It's just like watching paint dry. It's like, wow, this is a very productive time for me. But here's what I've got. So I've got the three EMAs. There are 9 EMAs. They are anchored to different points. So how I would use that, I would stay on a 2-minute chart. And then I would be looking for smooth price action to be followed by volume, either breaking below the ribbon and then continuing, and or breaking above, depending on the setup that I'm looking for. Now, every time that happens, I will also be careful of what the volume profile is doing and how the price action looks. So here we have very non-committal price action. It's like a lot of inside bars. That's not what you want to see. You really want to see, let's go all the way back to Friday. So you really want to see something like this. So this is a nice smash below the ribbon, and then just a nice sort of move down. Never really moves above the ribbon, which means that you have a committed sort of sell-off in one direction. And on the other side, on the flip side, you want to see something like this, right? So it pumps above the ribbon, slowly starts moving, and then volume picks up, and with that picks up the price action as well. Same thing happening here. So pump, very clean price action, sticks away from the inside bars. Yes, retest the 9 EMA, but ultimately 9 EMA is not able to bring any further move through it. Remember, this is a super low time frame. It has to be done with higher time frame context. And then you have this nice pump higher. Okay? So that's the first thing. I call it my timing tools. The next thing that I have is Globex VWAP. I look at that on a 30-minute chart. That is the purple line. I do use it with this setting. So, sorry, wrong indicator. When you first put it on the chart, it's going to give you high-low close divided by 3. I don't like that measure. I want it open, high-low close divided by 4 because I want the four measures to be in there. That's just me being a nerd. This one is anchored to Globex Open, and it becomes my guiding hand for any sort of a trending move. So if we're below VWAP, I will also be looking for my initial balance on the other charts to give me the extension and the sustained move outside of the initial balance in the same direction. If not, then you have a conflict of interest in the indicators, and there's something else going on there. Tougher day for sure. Then I have just the regular volumes. This is what you see here. I have the DMI, or this is DI, directional indicator. Basically a similar thing from whatever you see on the ribbon and the volume, but smoothed out. I don't use it that much. I just like it how it looks on here. But sometimes if I'm looking for a directional move, if it's sticking to one color and it's kind of increasing, that sort of gives me confidence to stay in on my swings a little bit more. But I'm not somebody who looks at that and goes, oh, DMI has gone all red, let's go short. Because sometimes when you have failed auctions, they are typically mean reversions. They don't show up very well on those types of indicators because they are lagging. And for failed auctions in particular, they're very real time. So it's like once it starts spending time inside the initial balance, and I see things on Bookmap and stuff like big bubbles coming in, big bulls coming in on the other side. That's my sign to just jump in and ride the wave back through the initial balance. And that won't show up on the lagging indicators, obviously, until it's too late. So those are the sort of trades where I will front run them. And that's pretty much it. And then I have the volume profile, which I kind of explained at the beginning of the session. You know, nothing too fancy. This bottom oscillator is just the average true range, but I only use that. I use it in a different way than Coach Paul. So he uses it to measure the stop loss. So he uses it as a volatility adjusted stop loss measure. 5 minutes chart. He uses a 5-minute chart, and then he aims for his stop losses to be 2 times ATR. I have another way of measuring my stop losses. I like to use multiple sessions and only take the regular trading session of the hours that I'm trading across the previous 10 days. So it's like London session, just a London session. How much do we move? And then I effectively divide that number by a certain number, like 4, 5, or 6. Sometimes even if the structure allows me to minimize that, I might go lower, but I don't like going lower than 6 because it then screws up the expectancy, because then you'll be whipped out before you give the trade time to do what it's meant to do. So I personally have a different way of coming up with stop loss sizes. They're always volatility adjusted, and that's in my other platform, which is my indicators. So for example, this is let's go to London. So I have some numbers here relating to the session sizes and stuff. That's how I would scale my stops. I have the TPO profile in the letter form, but also in the graphical representation. I have supply and demands, and these dashed and dotted lines, they represent the quantitative extremes, which is my ADR low, ADR high, and also ASR low and ASR high, which represents the active session average range. So, you know, I have a few things going on there. Again, you're looking at 18 years of me chopping and changing and tweaking and keeping and, you know, chucking out and bringing it back in. And then eventually I just came to some levels that are very much price action based with a little bit of oscillator in there. And that's it. The rest of it is just situational awareness and looking for price action to do what I expect it to do at that level. So hopefully that helps. Those are all my indicators. Dome is there to look for real-time imbalance. So for example, if I'm short and I suddenly see like 43 contracts up at, I don't know, 554, I'm going to think twice whether I'm going to stay in that short. Why? Because somebody with a lot of size comes in on the other side. And sometimes you see them chase. It's quite funny. I caught them chasing 108 contracts on natural gas last week. They were like up at like a certain price. And then it kind of very quickly started moving. And they couldn't catch the move because it was a short move. And then they were just like, oh, crap. And then you see the same 108 contracts like moving down. And I was like, you're chasing. I see you. And yeah, that was a funny moment. But yeah, if it's like on the opposite side, then to me, that will be a signal, especially in copper, to wait. Because in copper, what they like to do is to smash the big orders first. So whenever you see massive prices, they will probably smash that to a degree of like 80% accuracy. 80% of the time that will happen. And that will either provide me a better entry, or it means that I should change my direction and I'm wrong. So it depends. Sometimes it's a quiet day. When it's a quiet day, you will see 40 contracts up. Then that gets hunted. And then suddenly you see 43 contracts to the low side. That's a sign of a range-bound market, because that's like market makers are adjusting inventory to stay market neutral, if that makes sense. Because that's their objective. Their objective is not to make money with like a million ticks. Their objective is to maintain the market neutral state. Many people don't realize that. They think that market makers are some like evil entities that sit there in the dark in the corner with green lights and they're hunting your stops. They're not. They're not doing that. They're just providing liquidity. They need to provide liquidity at the best prices available while maintaining neutrality. Darth Buddha, locked out, combine pass, back in XFA. This time 100% putting my buffer first, payout second until I go live. Excellent. I like those objectives. Just don't psych yourself out over it. Just try to make that something normal. It's like, all right, I'm prioritizing the buffer. I have a budget. Think about it this way, Darth Buddha. You have a budget on the day, right? I suspect everybody has dealt with budget at some point. Whether it's the budget for your groceries or whatever, why not look at this the same way? You cannot go over budget. So do everything in your power, like lock yourself out the day before. Don't move your budget, and just day after day, sit down, do your job, respect the budget. No matter what happens, try to emotionally deal with a losing day as best as possible. Learn to let go and just say, F it, it happened, can't change it, let's carry on. Be more dog, because dogs live very like in the now. Whatever happens to them, they're like, yes, they can suffer traumas and stuff, but largely dogs are exceptionally good at forgiving, forgetting. They don't even forget, but you know, because I've had rescues before and they definitely don't forget, but they adapt and they don't seem that bothered by the past if their present is all nice, right? So just whatever's happened in the past, even if it was like an hour ago, do your best to put it outside of your mind. Be more Drew Barrymore in 50 First Dates. If you haven't seen that movie, go watch it. You'll see what I mean. But just in short, she went through, her character went through a car accident, and as a result of that, she cannot retain any memories past a single day. So whatever happened yesterday, she just forgets about it. So I frequently say I'm a bit like Drew Barrymore. Somebody asked me, what trades did you do yesterday, Dee? And I'm like, I have no idea. I literally have no idea. Yeah, so Dalbo said, I have a hard time losing, but lucky my win rate is usually in the 90s. I don't think that that's lucky. I think maybe that's why you're struggling. I'm guessing it's a case of a heavily negative risk reward. So you are 90% profitable. Well done. Just know that maintaining 90% accuracy over long periods of time, I'm not talking 1 week, 2 weeks, 3 months, even 6 months, I'm talking years. So if you're basing your risk model on the fact that you are 90% profitable, I can see stability issues in that risk model. That's all I'm going to say, right? I don't know what your risk reward is like. If you tell me your risk reward is over 1.3, you'll build an empire. Empire? Sorry, I just came back from Serbia, so my accent is going to be a little bit weird. Because obviously I speak Serbian over there with everybody. But yeah, and they say imperia, whereas UK says empire. And I find that frequently whenever I come back, I tend to smush words together from like both things, and then I get a lot of things wrong in Serbian because I don't really speak Serbian that frequently here. All right, so for example, on the dome, on copper, look at this. We got this is not the biggest contract, but it's an example of an imbalance. 17 contracts at 553. If this was bigger, if it was like 40 contracts, I would say there's like an 80% probability that they're going to hunt that. There's still a very good probability that they will test 553. Not immediately. You don't know when. But at some point, that's the price. When somebody's waiting, like Bob over there, with 17 contracts. So it's a bigger player, probably a market maker, although not necessarily. But it's somebody with slightly deeper pockets, right? So they're the ones that are very visible to the rest of them, and they represent liquidity. And that's why the prices gravitate towards them. They act as magnets. Marcus says, just realized I have no idea how this works. Do market makers have to buy micros and mini lots to be able to sell them to buyers? No, this is futures. So you don't have to, so it's not like, how do I explain this to you? So it's not like stocks where if you want to short a stock, you have to actually loan it from somebody who owns it. There's no such thing as futures. So futures are outright positions, either short or long, that trade on a margin, right? So whether it's long or short, it doesn't matter. There's a margin involved. It's kind of like buying a mortgage and putting down a down payment and then them giving you a loan. But it's not quite the same. That's just a margin. You don't need to have somebody who owns the stock lend you the futures contract. It doesn't work that way. So basically, when you are doing a market making job, you get given a volume amount on the day. And I know this because I briefly worked for a market making company. Very briefly. I didn't like it. It's not my style. And I absolutely, like, no, it just wasn't for me. And that's okay, you know. So you get given X amount of contracts to fill in the day. Let's say 1,000 contracts. And then you are supposed to provide the best price possible while still on both sides, filling the volume on the day, and then trying to do as many transactions that you can possibly get away with whilst providing the good price, because more transactions means the better bid and ask spread, tighter bid and ask. This is why some of the more speculative products like ES, they have no spread. It's like zero. But you look at something like platinum, you will have a big spread. Why? Because there's not enough liquidity and volatility. Well, there's volatility, but there's not enough market makers to create a really nice tight spread. So you will sometimes see like 3, 4, 5 tick spread. That's because there's not enough market makers working, especially not this time of the day. But basically, there are certain prices where, and then RBOB, super, super patchy. Look at that. There's like 1974, nothing until 1984. That means this market is not trading at the moment. This is like, the market makers are asleep. They're like, you know, their bed. Who's behind them? Their pillow and their mattress. That's where they are right now. But gold usually trades a little bit more, so you will see it quite populated. But there are points where, and remember, they hold a certain amount of inventory through accumulating like positions, buying and selling, and, you know, many times in many different things. But you can have, like nowadays, that's algorithms. Sometimes you don't really have human people sitting there. Like a lot of the market making right now is being done by HFT algos. That's their thing. But you still have some people, you know, actual human market makers as well. So there are points where, and as a company, you have a certain amount of inventory accumulation on your books, right? And then after a certain price point, usually at like put support or call resistance areas from the options activity, and market makers would generally do options as well. I don't know how many people know that. They will be market making and then maintaining a delta neutral position through options, just in case something goes wrong. So basically what happens is that once those prices, pivotal prices, are reached, they either have to dump a whole bunch of inventory, therefore causing a reversal, or they have to buy more, which then acts as an accelerator. So understanding these sort of market making games, and they're not really games, they're just like mechanistic ways that the market operates, and what their role actually is in the market, you will stop thinking of market makers as some like big bad Voldemort type character. That's how hip am I? I'm using like Harry Potter reference. Did I say that right? at all. Like Granny D trying to be cool with the kids. Yeah, so they're not out there to hunt your stops. They just know where the stops are naturally located by retail traders who don't have that much experience, right? And that's what they hunt. They hunt obvious highs, obvious lows that are nearby. That's why you will see a stop run in reverse from Asia lows and highs. Market makers, right? They know that's where liquidity is. So even if they have to maintain a market neutral state, they will go to those points. Same thing with initial balance highs and lows. Usually they will engage around those areas. How they will engage, that's a whole different discussion. But just know that their job is to maintain a market neutral state, not to make money out of massive moves. Far from it. That's like institutions who are position trading. That's different. But that's why you have this division in market profile between market makers versus other time frame participants over here. So that's why I look for the extensions of that initial balance range, because they're the ones who will drive the market a particular way. And then if we overshoot, that's when market makers can either drive them completely through those levels, or they would just put a stop to it to try and control their own risk and their position in the overall market. So hopefully that makes sense. Now a little bit more, you know. I know that a lot of people are confused about market making, but yeah, it's a function of the market to keep market stable. That's what it is. To keep market stable and to provide a very decent liquidity at nearly every single price, so that you don't have to wait. You know, for example, there are forward contracts that are privately negotiated contracts, and they're very big over in the UK. So you can have two parties negotiating. Like, let's say that they're going to buy euro dollar at like a particular price from another party, and they can privately negotiate what that's going to be. But then there's not going to be anybody in between, because there's just two parties there. But then let's bring in another two guys. This is how markets work. Let's bring in another two guys. So now suddenly you have this guy wanting, I don't know, let's say you went from one guy wanting $15 and the other one wanting $13. And suddenly you get two more guys, and then one guy goes, well, I actually want it at 12. And this other guy says, well, actually, I wouldn't mind buying some around 9. So that then increases the volatility and liquidity, because now you have four prices that are trading. So imagine that on a massive scale, where you have like thousands of people market making and providing liquidity at every single price point. Does that make sense? I think that's the simplest way that I can describe liquidity in the markets and market making. Darth Buddha says, I think Five Panda says, there's a good song called Serbia Strong. Really? And that's some nationalistic stuff. I don't subscribe to stuff that goes on there. Otherwise, I wouldn't be a naturalized British citizen with no Serbian passport, right? I'm from there. They have their problems. But yeah. Darth Buddha. I think honestly I need to find a trade buddy with a lower win rate but better risk management and give them the power to shut me down. At least have someone else to say, you crazy, shut it down. Okay, look, I mean, this is a live account, so I don't have all the fancy tools that XFAs have, but XFAs now have trade limits. They have risk daily loss limit, right? Risk tools. They have number of trades per week. They have simple blocks, right? Please use them. So this is the time. You have a new XFA. Use them. Use them to your advantage. Use them to help you succeed and to help your brain learn that there is no more. Like your risk tools should be kind of like your mom and dad telling you no when you're a child. Because, you know, I don't know how you guys grew up, but in my family, if I wanted something as a kid and it just wasn't allowed, there would be no option, right? I could cry. I could be a total brat. I could be, you know, putting up a temper tantrum and stuff. When my mom said no, it was a no, okay? And there was nothing you could do. You felt helpless. You're like, but I really want that. And you're like, well, no, you have to deal with it. And same thing with wrist tools. I feel like whenever we're trying to control ourselves, we almost turn into kids again. We turn into toddlers that are throwing their toys out of a pram and going, but I really want the toy. And then somebody goes, well, you can't have the toy. Toy being in this situation, more trades, right? And you have to just go, okay, I'm an adult. No more. I've blown my budget for the day. I now have to wait. So learn the power of delayed gratification. That will serve you better than any strategy in trading. You will learn how to let go. You will learn to be okay with defeat and taking it on the chin. And arguably, that's the strongest skill that you can ever have as a trader. So actively, deliberately try to train that in yourself. In fact, I had times when I would open up a crappy little account just to intentionally find a position and let it go. Don't touch the stop loss. Don't overmanage. And I would let it get hit. And then I would be like, okay, that's really uncomfortable. And then I'd be like, okay, it's okay, let it go. You almost like soothe yourself, soothe the inner child, going, it's okay, there will be another trade. But there can't be another trade now. It has to be tomorrow. And then you strengthen that side of you to say, ouch, I'm going to shake myself off and then come back tomorrow and not be bothered by this. But if the loss is significant, that will always hurt. So this is why we always preach size down, slow down, size down, slow down, size down, slow down. You know, again, I have Pete the Process Parrot up here. Might bring him out for, I don't know, for this week. But yeah, just, you have to train that. It's a trainable skill, you know, learning to be okay with a loss, learning to wait. And some people say, oh, wait for 15 minutes. No, I say wait a full day. If you have a problem walking away from a loss, you have a problem, right? So you have to sort that out first and then go, all right, well, tomorrow I'm going to come back and be okay and start again, reset, wipe your brain. Yesterday didn't happen because it was a control loss. Let's continue. Ellie says, how do I trade for a corporate firm or a company? Why would you want to do that? First of all, trading for a corporate firm, I mean, you have firms like Topstep, right? So they're not a corporation, but they are one of the biggest prop firms, yeah? And oldest as well. If you want to actually trade for a bank, you're going to find out that they don't really have manual traders anymore. Everything is automated. They have no desire to hire anyone who doesn't have a PhD in statistics or quantitative trading or some kind of, you know, mathematical thing where you have to learn to code to a very high level, and then you have to have generate alpha through coding. If you don't have that, just forget about the whole idea of trading for a corporate firm, because they don't have manual traders. It's an old job that doesn't exist anymore, okay? And they are, like, anyone coming from non-Ivy League universities or equivalent over in the UK, they're just going to tell you to F off. Like, you won't even get to the interview stage. I'm telling you this as somebody who had an IT recruitment agency, and I've seen how those types of firms are very elitist, and they just don't care. Okay? So unless you come from an Ivy League background, you already have a PhD in statistics or, you know, mathematics or anything that is related to very high level, you know, probabilities and able to read extremely complex data, forget about the idea of trading for a corporation. Are options dealers market makers? Yeah, some of them, yeah. And Q Hunter says, oh yeah, trading will bring out base emotions we thought were under control. Yeah, it's a weird one, isn't it? I thought that I was a pretty confident person when I first started trading. Then I found out that I have an inadequacy problem, sense of inadequacy. Why? Because my sister, being here in chat, She's 10.5 years older than me, and she was good at everything, just naturally. And I was good at certain things, but, only later I uncovered some of my talents that really kind of shone through, but it took a while. Whereas she was one of those like 3-4-year-olds that were just like good at singing, good at drawing, good at everything. And I was like, oh. So everybody was comparing me with her. And then my dad made this like offshoot comment when I was 3 years old. Oh, you'll never make money out of that, love, sort of thing. He didn't mean it in a mean way. It's just, it was like I was... I don't even know what I was doing, but it was a bad skill. Why? Because I was 3, I didn't know anything. But because he had the experience of his older daughter, when she was 3, doing the same things exquisitely well, I did not measure up to that. So he did a throwaway comment that stuck with me for all of this time. And only when I started trading, I almost heard my dad's voice when I lost my first account. I was like, what makes you think that you can do this? And I was like, whoa, where the hell did that come from? It's like, what is going on here? So I actually went to therapy to try and find out what happened. And very quickly, the therapist figured out that it was something that happened when I was a toddler. When I remembered that, I started crying. I don't cry, right? I'm not one of those. In fact, I only cry if it's like life or death situation. Otherwise, whatever. But yeah, I remembered that, and I was like, wow. And it's almost like somebody took the burden off of my shoulders that I've been carrying all my life. And things have been a lot easier, knowing that every time some of my issues crop up, I know where they come from. And I'm like, oh, here we go again. Old friend. Yeah, let's try and get ahead of this before it harms me. So yeah, it definitely provides you with a point of view. Once you know why you're doing things, you will be shocked. You'll be like, what the actual F is going on here? And then you can start work on it. And you can start recognizing some of your self-sabotaging behaviors in either the perception of the world that you had as a child, or, something, maybe you were abandoned, as a kid, if you come from a broken home. That's actually a huge thing. I don't have that because my parents stayed together until my dad died. Whether that was a good choice or not is another matter, but it was that kind of time as well. People just didn't really get divorced very often, and especially not in that country. So, some things that you think are not bothering you as an adult and that you actually navigated life really well in other areas, trading comes along and just shows you that you're completely wrong. You're like, yeah, this is great, isn't it? Like, for example, a lot of business people have a lot of drive and ambition, and they are not fully aware where it comes from. And yet a lot of them have that drive and ambition because they come from very poor backgrounds, and they're completely scarred by not having enough resources in life, and they hate it. So therefore, their perception of the world is that the parents don't have money, that we are not able to buy things, that, you have to fight for your food and, things like that. That's something that drives a lot of people who are self-made, right? And every time those sorts of people start trading, they find out that they don't want to let it go, because that's a skill that served them well, coming from when they were toddlers, but it served them well. You try and push in trading, it's going to just destroy you completely. It's like the worst thing you can do. You can't force trades. So therefore, they need to almost unlearn and relearn some other skills. But at the same time, they always go through a massive self-awareness and transformation. And as a result, I believe those people actually become better leaders as well, if they tackle their issues. How do you get the PDPT and DLL as a bar chart on the top? Okay, so DLL, that's just a live account assigned. So I have the ability to have the DLL. Well, no, I have the basic DLL 3000. Do I use all of that? Very rarely. Okay, so most of the time what I will do is I will go in here and I will put, depending on how my month is going, I will either remove it, or I will either keep it at 3K or I will lower it. And the PDPT is just you set your target. So you go into settings and you set the personal daily profit target. And then I have it set on liquidate because I just want it to like liquidate. I don't want it to block necessarily. I just want it to stop profit but I only have it there because I want to see how much profit and loss I'm doing, because that nowhere else in Topstep X do you have that. You have the overall balance that goes up and down. I hate looking at that. You have the realized P&L. Also hate looking at that, whether it's positive or negative. I hate it. And then the only way you can smush your entire minus and plus in the same thing, it actually shows up in your PDPT. But you have to set it to either liquidate or liquidate and block, otherwise it won't show up. Okay, and that goes the same for personal daily loss limit. Here I don't have it set to anything, but let's say today is Monday. I don't really want to, put a massive dent in there. I just took a payout last week as well. Made a little bit of cash before I bounced to Serbia because I can't trade live from there because it's a country that's not under the rules. And here, same thing. If you say nothing, it's going to do nothing. But if you say liquidate and then you save all of that, then it's going to change this and show up. And similarly here, if I say do nothing and then I save that, it's going to disappear. Okay. But if you say liquidate or liquidate and block, it then appears. Hope that helps. All right, guys, we've come to the end. I think... just take it slow on Monday. I think I'm going to wait until COMEX kicks in. I mean, I have no other option, right? I'll block myself out. I'm going to wait until sort of after 9 a.m. Central. That's after 3 p.m. Maybe even into the Euro close, because Euro close reversals are very high probability on my products. So yeah, just try and snipe one for the Monday, one and done. Maybe two if the first one is kind of taking a little bit of time to carry on. Otherwise, yeah, let's see what the week brings. It is summertime, but we do have Trump constantly awake and tweeting, talking. So be aware of headline risk. Have your financial juice open. Don't get caught unaware. Usually newsy events, they massively increase the price action. Every time you see that, it's what we refer to as a tape bomb. And when you see that, just know that there's something weird going on. Just close it and go to financial juice. Don't go, oh my God, I just lost. Let me do another trade. So replace that behavior. Replace the behavior of doing another trade after a tape bomb with what just happened. Let me have a look. So let's work on that this week. Have a great Monday. I will probably see you for lunchbox trading at some point this week. I haven't looked at my schedule yet. Don't think it's even out yet. In the meantime, let's try to be less grasshopper, which means less overtrader, and more market stalker, right? So keep that grasshopper hat in the corner, like me. Just looking at me. Anyways, this has been the Euro Trade. I'm Market Stalker D, and I will see you a little bit later. Have a good one.